Hi, this is Mike Maloney with Jeff Clark once again. Jeff, how are you doing?
I'm doing great, Mike, and we have something special today for our YouTube followers. Insiders know that we've had Adam Taggart, the co-founder of Peak Prosperity, join us for some of those conversations, and he's going to join us here as well. So, Adam, Mike, and I want to welcome you to the team, and thanks for joining us. How are you doing?
I'm doing just great. Thanks, Jeff. Huge honor to be here with you and Mike. Thank you for bringing me into these conversations. A lot to talk about given what's going on in the world right now, especially in the world of precious metals. Just thrilled to be here with you guys.
I want to welcome you too, Adam. It's great to have you here. We've known each other for quite a while now. And so, Jeff, what is the topic for the day?
We have lots of topics today, so we're going to move kind of fast because there's lots to talk about in the industry, as Adam alluded to there. So this first article is from Craig Hemke over at Sprott, and he's talking about the delivery option now that expires today on the COMEX. So we won't know till either tomorrow or maybe when the COTs come out if a lot of investors stand for delivery at the COMEX or not. This is a very good article because Craig goes into a little bit of education here, how the COMEX actually works, what the outstanding contracts are, and then he goes into what he thinks is realistic to happen. So it's worth 5 minutes reading. But I know Mike and Adam both have some comments and reactions to this. So Mike, what's your reaction to this article from Craig?
Well, one of the things that he's talking about there is a default on the COMEX and that it's probably not going to happen. And he's absolutely right. One of the things that he didn't mention was that, if it was going to happen, if it's imminent, they just changed the rules. That's what they did to the Hunt brothers. They changed the rules. It will never happen. There's not going to be a default, so don't count on it. The article ends with, you can play this game and you can take delivery, but you can also do the same thing just by buying physical coins and bars. And that's what I have been recommending because all of the physical coins and bars come from melting down 1,000-ounce bars. So somebody's taking, a mint, a refiner is taking them off of the exchange and melting them down and they're gone. So they're not there. So that's one way of decreasing the amount of silver that's on the COMEX. And, you've seen lately the price of the physical diverge from the paper price that's set by the commodities exchange. And that will grow huge as we take more and more silver away from them. Adam, what's your opinion?
Yeah, very, very much in alignment with you, Mike. So Craig does great work, and his piece really goes into sort of how the COMEX delivery system works. And I think, Jeff's point, everybody should take 5 minutes to read that article to get a better understanding exactly of how it works. And when you read it, you realize that the goal of this, the hashtag silver squeeze is unlikely to be accomplished, this month. This is much more of sort of a marathon than a sprint. If you are one of the people, and I think we all are ourselves, we do see opportunity over time for the masses to take enough silver off the market that the people that are manipulating the prices are really going to get into trouble. But if you go through the math, as Craig does, you realize it's highly unlikely to be something that's going to happen imminently. It's going to happen by all of us chipping away at this over time, doing exactly what you just said, which is just taking more and more physical ounces out of the market, coin by coin, bar by bar, et cetera. I've also talked with Robert Misch, who is a frontline precious metals dealer who has over 60 years, believe it or not, industry experience on the front lines. And he thinks very similar to us, but he is saying that inventories continue to tighten. He is seeing both sort of the awake guard of people who've been buying precious metals for a long time, redoubling their efforts and buying more. But more importantly, he's seeing more first-time buyers come in who are kind of, learning of the precious metal story. Maybe they're Bitcoin owners and they're realizing the same reasons they own Bitcoin are good reasons to own some precious metals as well. And so as we get more people aware of this and get them to come in, we are seeing that it is having an impact in the industry. So again, this is going to be a marathon, not a sprint.
Yeah, and I enjoy the marathon. It actually gives you more opportunity to accumulate more ounces. And the longer this goes on with like the stock markets going up, everything else going into bubbles, and the Federal Reserve and the rest of the world's central banks printing more and more and more currency, the bigger this thing is going to be. So having it take a little longer just gives you everybody the opportunity to accumulate more ounces. Jeff, what do you think?
I agree, obviously, as we've been saying, Mike, and Adam has been saying separately as well. This really only works if you take physical supply and take delivery, take physical out of the system, if you will. So the issue is, if you want to impact the system, you've got to drain them of their metal. So you could say you have to drain and maintain. So there's a new saying for you. You got to drain the system of physical metal, and you got to maintain your position through this marathon to make sure it works. So
that's one thing to build on that, Jeff. So one of the things that Craig did mention too, which I think is worth noting, is something at Peak Prosperity we say a lot is that collapse happens from the outside in. So when the system begins to buckle, you're highly unlikely going to see it at the COMEX first, or see it in London. You're going to see it at the exchanges that are more on the fringe, like in Zurich or Singapore or whatnot. So, we really should be putting our attentions at those kind of outer edges of the system, because that's going to show us, that's going to be the earlier indicator as to when this is really beginning to materialize. So again, just wanted to, let folks know this is a marathon, not a sprint, and look to the weaker players first for signs of true weakness.
Right, that's a good point. And Craig does make that. He's saying, look, it's probably not going to happen in the US at the COMEX. It's probably not going to happen in London. It's probably going to happen in one of these outlier players where they can't get delivery, and all of a sudden you have a domino effect that's rolling through the system. So yeah, that's a great point. Well, here's a tweet of the day from First Majestic Silver, a company I really like. BlackRock, the world's biggest asset manager, is reducing their gold exposure for more silver, as it sold 2.7 million shares of GLD, basically, and bought 1.1 million shares of SLV. And this all occurred in Q4 of last year. So it's interesting that BlackRock, which is the world's largest asset manager, assets under management, swapped out gold for silver. So, Mike, I bet you have a comment on this.
Yeah, I do. The amount of GLD that they sold, the SPDR Gold Trust is GLD, and the amount of that, it's far, far larger than the amount of silver that they purchased. So they did something else with a lot of the cash. They only purchased they only took about 1/6 of the cash. It's like 427 billion, I think, is what the dollars worth of gold that they sold. And then they only bought, like, I can't remember, it was 60 billion or something like that of silver in SLV. But what I found most entertaining was the image that was embedded in this article. It was some bicycle gears from, a bicycle that has gears on the chain. And one of them was this big set of gears that were gold and made this big gold stack, and then a smaller stack of silver. But using gears instead of coins is sort of like saying that these are both just derivatives. They're air. They didn't use like gold or silver bars. They didn't use real gold or silver. They used some sort of image of something that was gold colored and silver colored. That's all they cared about. Adam,
yeah,
did you get a chance to see that article, Adam?
I didn't read the article, but I think that's such a great metaphor, right? They're selling GLD, which is really paper gold. It's not real gold itself, right? So I think it's a great metaphor for how the establishment sort of looks at the precious metal space, and obviously acts in the paper, not in the physical usually. But one thing I do want to say is BlackRock, they have a habit of winning an awful lot, and they tend to skate to where the puck is going. And if we remember where the gold silver ratio was at the end of Q3, they made these moves in Q4. We don't know exactly when, but they benefited from the fall in the gold silver ratio as silver appreciated quite well relative to gold over that point of time. So, one, kudos to them. They're an early mover and they're big enough to move markets. Maybe they actually played a role in actually, muscling that gold silver ratio down. But what's important about this too is that, BlackRock is one of those huge influencers in the investing world, right? So people see what they've done and then they follow that position. So I see this as yet another positive domino, sort of falling into the silver story, which is if a big player like BlackRock is swapping, one asset for silver, I think other people are going to follow suit just because they want to copy BlackRock's playbook.
Yeah, that's a good point. I think that'll likely happen. It'll influence other institutional investors. And like Mike has said, the institutional world is just beginning to get into the gold and silver markets. There's a long way to go with that. So here's another tweet I want to bounce off you guys real quick. This is from the Reddit Wall Street Silver link. PSLV is being manipulated by shorts. It is now, quote, hard to borrow, which means bankers are willing to pay interest to borrow your shares and short them with the promise of buying back your shares later. Here's what you need to do. And he goes on and says, if you own a large amount of PSLV like I do, place an order to sell your shares at a price of like $500 per share and make the order good till canceled so it stays open indefinitely. Once your shares are tied to an open order, they can no longer be lent to the banks to be shorted. This will drive up the, quote, hard to borrow interest rates further, making it more painful for banks to short PSLV. So a couple quick points there before I ask you, Mike. You can short PSLV, so this is one way for he's wanting to fight back. And good till canceled. I don't know if it'll stay open indefinitely. I think you do have to renew those every 6 months or something like that. But Mike, what do you make of this strategy that he's suggesting here on PSLV?
Well, I think it's a brilliant strategy. I wish I had thought of it. That is a great strategy. What he's basically saying is make it so that banks can't borrow your shares. The brokerage houses cannot borrow your shares and sell them to somebody that's going to, or loan them to somebody that's going to sell them short. Set your price up so high that it basically takes that option away from them. And the more people that are doing that, the less they can afford to be able to short the stock and the fund. And so it's a great way of keeping the big money, the big currency from manipulating the markets. It's excellent. What a great idea.
Right. What do you think, Adam?
I love it. And all I know is I'm going to go after we finish recording this and go put my shares of PSLV up for sale, but at $750 a share. I'm going to go.
There you go.
and if it hits that target, awesome.
Hey, yeah.
Right. Well,
right.
On to some comments of the day here. So this is from SBB. Well, Michael J. Burry was warning about hyperinflation until all of his tweets disappeared mysteriously a few hours ago. This was posted yesterday. What gives? Is it possible to reach out to him for an interview, Mike or Jeff? I checked out The Big Short, and it was a great film. I loved Christian Bale's portrayal of Mike Burry, who seems like a very peculiar genius, the best kind. And yes, I can attest, I've seen that movie. If you've not seen it, it is a very well done movie. And based on a true story, of course. So I did check Michael Burry's Twitter feed, and it looks like some of his tweets were actually deleted. I don't know if they're back up right now, but it does look like some were deleted. So, Mike, what do you make of that?
Well, the censorship issue is getting more and more interesting. It's a very different world that we live in today than in 2019. 2020 was very different from 2019, and 2021 is turning out to be a horrific year when it comes to freedom of speech. But I agree with him. I read the article when it originally, there was an article about his tweets when that originally came out with all of the quotes from authors that had written books on the Weimar hyperinflation. And we have gone through these stages already that that the Weimar Republic went through just before the hyperinflation really kicked into gear, with the bifurcation of society, and a whole bunch of the public starting to speculate in the markets, whether it's cryptos or the stock market or real estate or whatever, but everybody's trying to get rich by trading instead of creating new wealth. You're just, passing dollars back and forth with somebody else, hoping that when the game stops, that you end up with more of them than the other guy. No new wealth is created in trading, just passing around old wealth that was created a long time ago. And the economy doesn't really grow from this. That's one of the things that people don't understand about fundamental economics. The stock market's going up doesn't mean the economy is growing. The economy grows when more goods and services are created. So one of the things that's very interesting about Michael Burry is he believes that he's got Asperger's syndrome, and that was portrayed very well in the movie The Big Short. But with Asperger's, somebody that has Asperger's, they don't have a real sensitivity as to how somebody may interpret what they're going to say. They just speak whatever they feel or think at the moment. And they aren't aware of what the consequences might be. So this is him just tweeting out the truth of what he believes. It doesn't have any spin on it. That's one of the things I like about this. Adam, what's your opinion on it?
Well, first off, I think there's so much to unpack of what you said there, Mike, and we don't have time for it today, I think, but we probably should do a deep dive on the dynamics of what happened in Weimar Germany, just so, our viewers have a real understanding of, should it happen here, what signposts to look for along the way. So first off with Michael Burry, incredibly bright guy. My world is reaching out and bringing people like Michael Burry on for interviews and whatnot. And two things, Mike, I agree with everything you said about censorship. That very well may be what's going on here, but it could also just be his compliance team. For a guy with Asperger's who is sort of speaking off the top of his mind, who has investors that he has to report to, sometimes the compliance people step in and say, hey, whoa, wait a minute. Maybe we need to walk that back, or maybe we need to hide these tweets. So it might not be as nefarious as we may fear. Maybe it is, but it could just be a concerned compliance person. But I agree with everything that Michael said, obviously, and that you said there too, Mike. And I guess the key thing I want to underline about Michael is, if you watch The Big Short, which is a great movie, or read the book, phenomenal book by Michael Lewis, Michael saw the fragility of the system, and he took out big bets that he actually had to create. There wasn't an easy way to short the housing bubble. He actually had to create some of the instruments that he ended up using to do so. And he lost money for years. He lost a lot of money for years before he was then proved right, and then made an incredible boatload of money. But he had to have that conviction to hang in there, to know that he was right, even though the market hadn't woken up to that reality yet. And I think for long-suffering precious metal holders who are wondering, why is gold, why is silver not taking off like Bitcoin or Tesla or GameStop or whatever? I think there's a lot we can take from Michael Burry's history there, which is, fortunately, we're not losing a lot of money. We're just not making as much as we think we should be. The time will come, and it's the exact same dynamic where you just need to have the courage and the perseverance of your convictions to hang in there until the world wakes up to reality, and then to be positioned well when that adjustment moment happens. So I think Michael is a great, kind of model for all of us for that.
Well, listen, we're going to wrap this video up. Thanks, everyone, for joining us. Mike's going to close it out here with the quote of the day. If you've not downloaded Mike's book, if you've not read it yet, you can do so for free. We'll include the link below here. So, Mike, what's our quote of the day here?
Okay, this is from the great Thomas Sowell. By the way, there is a wonderful video where an interview with him on the internet. Hopefully we can get that posted below this video or make a link to it somewhere. But the quote of the day is, politics is the art of making your selfish desires seem like the national interest. That seems to be what 99% of the politicians do.
The psychopath's playbook.
Yes.
Right. Well, thank you, everybody, for watching. Mike, thank you. And Adam, thanks for joining us. And we'll see you both on the next call.
A real pleasure, guys.
Okay. Bye, you guys.